consumer, don't mistake rising stock prices for improvements in the U.S. economy. The U.S. economy is not improving. The fundamentals are deteriorating. Stock prices are only rising because of inflation. And if you're going to buy stocks as an inflation hedge, buy the stocks that have earnings coming in from abroad, or better yet, buy foreign stocks where all their earnings are coming from abroad. You get a much better hedge.
Would any one of you like to rationalize for me why it is that somebody is willing to lend their money to the U.S. government for only 2.6% interest? Are any of you doing that?
I'm not. Are you?
No.
I don't know
unless
anybody.
you believe in deflation, right?
Well, that's why stocks are rising. That's why stocks are rising right now, Michelle. But the fact of the matter is, we have a lot of issues that we still face in the United States, and we're set for the biggest tax increases, the biggest set of tax increases in our history, starting in January.
But are you making the case for deflation? You're making the case for deflation, right? You're making the case for a weak economy.
But that doesn't mean deflation.
Well, look,
actually, it means more inflation
first, and then hyperinflation afterwards. They're not mutually exclusive. One usually begets the other. And the notion that the Fed can act perfectly in sync and time our way out of this is a joke. They've been behind the curve the whole way.
Yeah, absolutely. Historically, the greatest inflations come when economies are weak, not strong. When you have a strong economy producing more goods, that keeps prices down. When you have a weak economy where we're not producing and the Fed is stimulating like crazy to try to generate growth, all we're going to get is runaway inflation. We're going to have stagflation like the 70s, only this is going to be an inflationary depression.
Oh, geez. Michael Cugino, what, though, if somebody is looking for safety, they don't like stocks? Look, treasuries, if we start to see interest rates rise, aren't going to turn out to be safe either. How do you get yield here?
Well, I mean, although on the shorter end of the curve, you'll be able to play the rise in interest rates quicker. Your question on is anybody buying treasuries? Yeah, we are. I mean, we're trying to manage the yield curve right now as part of our investment strategy on the theory that potentially this inflationary story's wrong and we have a double dip bounce around stagflationary situation and inflation's years down the road. And so I think some money has been made in bonds this year and may continue to be for a while because for the most part, treasuries have been in a trading range.
Right.
The other thing on U.S. Treasuries, would anybody buy them? Well, where else are you going to go? I mean, it's the best of a race to the bottom in terms of major currencies, and so to provide some
better
bond
not be in them when it turns.
But
the dollar's going to win that race.
You better not be in them when it turns, because when it turns, those rates are going to skyrocket.
Yeah,
I mean, look at how fast.
But you're missing his point. You're missing his point. I think your point you're making, Michael, is just in case we end up with deflation, some people say there is a possibility of that. You have some money there because then that trade pays off.
Yeah, we can also be hit by a meteor.
That's exactly right, Michelle. And again, what I'm hearing is the case for broad diversification in this discussion right now.
Peter, I heard a funny snide comment there. What was it?
Well, I said, we could be hit by a meteor too, but I'm not going to prepare for that. We need deflation. Unfortunately, we're not going to get it. That would be healthy. What we're going to get is runaway inflation.
Well, we are getting deflation.
No,
wait a minute. We are getting deflation in housing
Where do you
prices.
shop?
We're getting deflation in a lot of asset classes.
But that's not
We're seeing deflation in real estate prices all over the country.
No, but that's not deflation.
We could experience.
No.
But Peter, and I agree with you on most of that. We could experience what Japan did. Japan had deflation for 20 years.
That's not deflation. If real estate prices are too high and they come down, that's not deflation. But you know what? The cost of owning a house is going to go up. Even though prices are coming down, utilities are going to go up. The cost of maintenance is going to go up. I mean, go to the grocery store. Are food prices falling? Go to the gas station. Where do you see consumer prices falling? They're not. They should be falling, given this huge contraction we had in the economy. But the Fed created so much inflation, prices are rising.
Suffice it to say, you don't think it's worth putting on a few percentages of your assets into treasuries for the just-in-case scenario? You don't think it's a possibility?
I would put 0%. Buying treasuries today is like buying .coms in 2000 or buying condos in Miami or Vegas in 2006. It is the sucker's trade of the decade. The only thing worse than owning U.S. dollars today is owning a promise to be paid U.S. dollars in 10 years or 30 years.
Okay.
Do not touch them.
Don't move. Guys, don't move. Quick break, then we're going to shift gears. We're going to talk about the other huge market story of the week. It's all about gold. How high can it go? That is up next on the Kudlow Report.